Hello, welcome to Self-Develop, a channel that provides tips on how to generate income using different available platforms. But also, today we are going to introduce something new, which is how to invest. Now, before talking about investment, we will be talking about how to save, which is the first step before moving to investing, and then we are going to start to talk about how to start investing in the stock market, but also the methods of investment. Now, this is an overview or summary, mostly for beginners, as it's quite a complex matter, investing. And today is the investment is focused mostly on the stock market. Oh, and of course there are other type of investments. Now, I put a warning here, because anything in this video is reflects basically my opinion, and if you need more info on how to invest, you should seek financial advisor. So right, let's start. So the first thing, which is the most important step and the hardest to do, is to save. But to be able to save, you will have to pay your debt. So any debt you have, such as credit cards or loans, you need to basically pay all of them, and like this you are free. You are debt free. Now here I'm not talking about a mortgage, which is a quite substantial amount of money which you will pay with time, like everybody or like most of us. I'm talking mostly about credit cards and loans, and you will feel much better when that type of debt is dealt with the quickest possible. Second step in saving is to start saving 10 or 15%, minimum 10 or 15% of your monthly income. Now, this is for a lot of people, it's very difficult, but it has to be done. There is nothing around it. So anybody who wants to start investing has to save, even if you don't want to invest, you will have to save. It will provide you with certain security, which is very, very important, especially in these times. Now, what it requires, you will have to sacrifice a lot of things to do that. But also, if the money is very tight, there is a possibility to find additional income. And in this channel, we provide a different type of basically different hustles, which will allow you to generate some money, which you can invest or pay your debt first, and then save and then invest. Now, this is quick overview. So step one is get rid of your debt. Step 2, start an emergency fund. Now, an emergency fund needs to be around 6 months. Some people say 3 months, but I don't think 3 months is enough, because time to find a job, for example, if somebody loses a job or her job, it's very difficult. 3 months, I don't think it's reasonable. I think 6 months is more suitable, or even more. But what it means, saving for an emergency fund, it means that you will have 6 months, at least 6 months of your expenses, your monthly expenses, saved. When you get to this stage, you have your emergency fund, you put it aside, you put it on your saving account, even if the saving account is not generating a lot of interest on the money you are investing in. However, you can take some of that money and put it into, for example, some of the online saving account, like I don't know, in the UK, for example, you have Marcus or something like that, where you get at least 1 to 2% on that money. And then when you have that emergency fund set, you can start any money afterwards you put aside, you can start investing. Now, this is very important. I put here down here that investing is not from your emergency fund, but it's emergency fund. You put it, you lock it, you put it there. You don't touch it. That's for emergency. And then anything else is you can use for investing. Now, a lot of people do not understand why investing. Well, investing is because it's for a lot of things. You need to invest. First, in the saving interest rates at the banks, as you know, is extremely low, and you have your money basically is losing its value every year, and this is due to inflation. For example, if you put $100 or £100, for example, or €100 into your into a saving account, which is not generating any interest. In some cases, some countries have a negative interest rate. So your money, let's say, for example, you have an inflation of 2%. You will lose 2% every year from the value of your money. For example, you have 100, so as I said, £100, dollars, or euros, or any other currency in that matter. You are going to, the year after, you are not going to have 100, but you are going to have 2% less. Now, why you invest in the stock market is that you will have a higher return on investment. So you are going to get about 5 to 7% yearly. So depending on the type of investment and your portfolio, which we will discuss in the next slides. So even if you have the inflation, which is 2%, you are still able to beat that inflation with ROI, or return on investment, of, let's say, of 4 to 6%, or 3 to 6%. Now, investing in stock market is not that simple, and there is a high risk with investment in the stock markets. For example, there is a risk of a stock market crash. As we know, we had one just in March, where the stock market crashes in different countries. Some of the investments in the stock markets are extremely risky. So some of the portfolio are risky because they contain some stocks which are, for example, highly volatile, or the companies which issued those stocks are not financially sound, and therefore these companies can disappear, and people lose their money. Another aspect associated with the risks is trading. So a lot of people try to start trading by trying to generate any income through trading with the stock market at the daily trade, and they lose a lot of money. And in some cases they lose all their money because trading is not easy and require a lot of experience. I personally do not trade because I don't know anything about trading, and there is a high risk associated with this practice. Now, in an investment portfolio, generally what you will find is that you can invest in shares, stocks. You can invest in bonds, gilts, or UK government bonds. They are called gilts. You can, in the US, for example, they are called treasuries, so you can invest in those. And then there are other type of investments such as commodities, for example, gold, oil, silver, but also some people invest in currencies. However, for beginners, it is advisable to stick with the classic one, which are stocks, bonds, and cash. Right. So, what are the type of investments? Yes, you have two types of investment. You have a passive investment and an active investment. So, what it means passive? It means that you as an investor is not actively involved in the selection of the assets. For example, you are not involved in selection of the stocks or the bonds or any commodity, for example, which goes into that passive investment, but somebody else selects that. Generally, this type of investment involve uh, uh, mutual funds, for example, or index funds, or ETFs that track markets, sectors, but also assets. And they are generally a basket of different assets which form a portfolio. Now, what's important here, there is also difference between mutual funds, which are actively managed, and in this case, the fees are associated with it, with this type of funds are expensive, and it doesn't ensure necessarily a good return in a long time in a long run. The reason for it is that because the fees are high. But also 80% of this fund, mutual funds, basically do not beat the market. So in most of the times they underperform the market. However, if you are investing in index funds or ETFs, for example, which have extremely low fees, this is much better in terms of cost effectiveness. Now, the other type of investment is active investment, and here you are the person who basically select the assets. For example, the stocks you want in your so you buy directly the stocks or bonds or whatever assets you are interested in, and you form your own portfolio. Now, this is quite advanced because to select, for example, stock, you need to know a lot about the company you are investing in, the history of that company, the finances of that company. So it's more difficult. Now, in investment, what you need to know also is that an investment portfolio can be formed in the case of a beginner one. Can be formed by stocks and shares, but also with bonds, gilt, and treasuries. Now, you need to know that in your portfolio, the more stocks you have in your portfolio, the higher is the return. And of course, oppositely, the more bonds you have, the lower is the return. Now, when I say a lower return, doesn't mean that you are generating zero. No, you are generating just less than if your portfolio contains more stocks. But also, the higher return is also associated with the higher risk. As you can see, the more equities or stocks and shares you have in your portfolio, the higher is the risk, and vice versa in a case of bonds, gilt, or treasuries. So choosing a good portfolio, balanced portfolio, depending on your appetite for risk, and for how long you want to hold it, to hold your this portfolio to grow, or to generate also dividend. So that's an example of what you can get if you have most of your portfolio into stocks. versus bonds, you can see that from December 2012 all the way to January 2019, the this S&P 500 index, which is an index fund which tracks the top 500 companies in the US, generated an average annualized return of 14.4%, which means that, for example, if you put $100, let's say in December 2012, that money is more than $225. So it's more than two and a half times more. So imagine if you have 10,000, for example, or for some people 100 or a million, you are it's 2.5 times, 2.5 times more. While if you have bonds, you can see that you are getting around 1.4%, which is barely beating the inflation. However, in this case, this author is using the Barclay US Aggregate Treasury bonds. But you have other bonds which are basically generate more a better average annualized return and beats the inflation, but is not going to perform as you will have with the stocks. So this is just an overview for beginners on how to invest in the stock markets. If you want me to provide you with more details, or if you want me to have another video which has more details on how to invest in the stock markets, I will be happy to make a video for you. In the meantime, I hope you like the video. Please push the like button, but also subscribe. This is a lot of work for me, and to generate content which can help and provide value to you. So I hope you can subscribe and show your support. So thank you very much, and I see you in the next videos. Happy investing.